This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the Premier Trade Forex Report with Scott Norse.
Good afternoon, traders. I'm Scott Norse here with your Forex Report. Wrapping up the week, today is Friday, August 31st, 2007. The Forex market was full of sudden reversals all week, making technical signals less reliable. The Dow has continued to have an amazing influence on currencies as traders focus on repricing risk. When traders are looking to avoid risk, we generally see stocks and carry trades fall and bonds rally. U.S. government bonds, or treasuries, have seen intense buying interest both domestically and abroad, which has helped give the dollar some actual strength. However, just as quickly as traders are dumping risky trades, speculators are putting them back on. Stocks have seen big up days followed by big down days, and currencies have followed the same path. We pointed out last week how similar a daily chart of the Dow looks to a daily chart of the euro-yen. This week we saw that pattern continue perfectly. This week's economic reports, including home sales, GDP, PCE, and even Fed minutes, all took a backseat to today's testimony from Fed Chairman Bernanke. Bernanke this morning spoke from Jackson Hole, Wyoming, on housing, economic health, and monetary policy. His most important comments concerning interest rates were that the Fed was ready to act as needed, but also, quote, not responsible for bailing out investors who made risky investments. One can really interpret this any number of ways, but stocks seem to like the news as odds of the Fed cutting rates later this year remained very high, as indicated by Fed funds futures. Bernanke also outlined concerns about the housing recession and its adverse effects on consumers and GDP, which he said could grow even worse. Overall, despite what the mix of comments may mean for stocks, we can only see this placing another big dark cloud over the U.S. dollar. Now to the big picture. We know there's certainly a ton of uncertainty in the markets surrounding everything from housing and consumers to credit and interest rates, and more so, how the U.S. and global economies will respond to it all. It's hard to view today's Bernanke speech as anything but a dollar negative, as the Fed chairman outlined quite a few risks to the U.S. economy and consumers. Furthermore, he left the door wide open to a rate cut by saying that the Fed was ready to act as necessary. Many economists believe that a September rate cut is a foregone conclusion. We are still not as certain and believe Bernanke would prefer to use measures other than cutting the Fed funds target. Either way, the fundamental backdrop for the U.S. is weak in comparison to most other G7 economies, which points to weakness in the greenback in the big picture. We expect that only interference in a broad dollar sell-off will be further unwinding of carry trades on the back of a sell-off in stocks. If stocks manage to hold up and carry trades remain firm, we can't see the dollar finding strength anywhere except against the Japanese yen. Remember, while a rate cut could give stocks a nice boost, it should have just the opposite effect on the buck. Till next week, have a wonderful weekend. Take care.